How's it going, everyone? It is Wednesday, March 20th, 2024, and let's get into the trading video of the day. All right, so let's start with our prior pick of the last video, which was GE as a day trade. So when the video came out, GE was looking over here, and you had a nice dollar of room to grab this chunk of the move. So how would you tell when to get out of GE? Well, depends what your bias is, but since we are in a day trade, we know that GE has made a pretty nice move, holding the gains here. So as it starts to break out of this compression at 12.05, what's the market doing at 12.05? Compressing, GE starts to move up higher. Okay, we get our little entry position here, 72.71. Market is now higher. You can see that it held the breakout, and we had a bullish cross. 1OP was above this level. Market started inching up higher to 1240. Okay, so G is going higher. Now, as the market's climbing higher, G is now actually losing quite a bit of its relative strength. So not a big deal. I know it has compressions and moves up, but here's the second tell. This compression starts to get pretty long in the tooth here, 120, 125. And look at what the market does from 105 all the way to 145, right? So if you put the market here, market's starting to rally, and GE is not able to rally. So we exit out of our position over here as it's losing relative strength in the market. We also know that we made a big move, and we got a bit of a bearish hammer here. So there's a chance for at least a double top, not a huge move down, but I would enter here and exit over here as it starts to lose relative strength. Now GE is climbing today, looking pretty nice, and we also have our longer term swing on the daily chart. That was another reason why we did not want to have multiple positions in GE, right? We don't need to add to a swing before the FOMC statement. We have our day trade, we have our gains. This is a longer term swing, and we're willing to hold it past the FOMC, so we're not worried about that for this trade. Okay, so GE, I'm going to notch as a win. And let's get into the market today. So, draw a couple lines here. The first is this horizontal range that we're in. Here's the bottom of the range, here's the top of the range. That's what's happening on a shorter term basis. I'm not going to go over the longer term bias today because it hasn't changed again that much from the last couple of videos. The main story that is a little bit not of concern, but just something to watch for, is that our CPI numbers came slightly hot, our PPI numbers came a little bit hotter, and there was some adverse reaction, but technically it didn't change the landscape. We are just in a horizontal trend, and I just believe that the market is slowing down after a massive run. I think that's the far more likely and more sensible story at this range. Now, we have the FOMC statement today. We're expecting a rate pause, and we're looking for guidance on future rate cuts. The market is pricing in a definite rate cut, or a very high likelihood of a rate cut for the July meeting. I believe that's about 80%, somewhere along those lines. You can check the CMC website, I believe. I may be butchering that, but you can look at the Fed future swaps data for that info. Now, we have SPY over here on the shorter term basis. That is the bigger story because we see the waning momentum and the neutral market bias on the shorter term. Okay, so if we are longer term bullish but very shorter term neutral, what does that tell us? It tells us that we should pare back some of our swing positions, and we should be looking for a dip. So all of the longer term swings I have, I'm expecting or prepared to take a dip in the market, and I want those stocks to hold. While that dip goes down, I have a hedge in VIX, a small hedge, and second, I expect those stocks to maintain relative strength. Third, I can day trade the short side while those stocks take heat. So I'm okay with taking a dip right now, knowing that this move is still pretty strong and buyers just need a good entry point for them to get into the positions or get into the market, right? So that's what we're seeing here. Now, we could see nice FOMC cuts, like if they say, hey, actually, we're going to cut in June, right? And the market's like, oh, we did not expect that. We could see a breakout to the upside. To me, that seemed like the more unlikely scenario given the hawkish Fed rhetoric, but that's the other side. It's good to keep in mind the possible scenarios that could happen, even the ones that are unlikely. So you're not super caught off guard. You just know that it's unlikely, so you're not expecting it. So longer term market bias is bullish. Shorter term market bias is more neutral. Price action for the last few days, again, range bound. We test the end of the range, push down, test the bottom of the range, move back up. So we're close to the top end of the range. So I wouldn't get any crazy with longs over here, even if there wasn't an FOMC statement, because we're at this top end and we need to see which way we break out. So longer term swing traders, if you have swings on longer in duration, like 3 months, 2 months, that are going up until earnings, I'll continue to hold them. That's what I'm doing with my long swings. If you're a shorter term swing trader, you take your swings here and then you exit here into the FOMC statement. So GE is a great one that you saw it's making a move. GPS continues, right? Had this nice horizontal breakout. Let's put this trend line somewhere here. Broke out your earnings, held the breakout, moved up higher. So you entered here, right? Here's March 18th. Okay, you entered on March 18th, and then you take your gains over here. That's a nice more than one ATR move on the stock. Really, really nice gains. You could enter that on an M15 pullback alert. The stock is inching higher and is definitely one to watch. We know that it makes big moves and it compresses, so there was a nice chance to get some great gains on this position. Okay, so wish it was my pick, but I did not put that as a pick, so cannot claim that as a win. What's happening over today? Let's zoom in today. We see that we have a flat open, which already tells us that, hey, there's no major news on either side. Volume is very low. We made a big move higher, sold off. Big move higher, we're going to sell off. But we have a very, very slight choppy channel. So let's draw that in. And I like to have the lines parallel. So this is a pretty good parallel channel that I feel like is going to be breached about any second. But somewhere here, like be a little more parallel, but have a decently choppy channel. And the market has a slight upward bias. So if you were to do any trades, one, they would have to be a short-term trade, and two, they would be favoring the long side. So what are some trades that we can day trade here? And let's actually quickly go over the market components before I give those picks. So we know they have, to me, my market bias intraday is a 1 bullish. We have a short time frame from our trades. It's got to be small size, hit and run. If you are going to do a day trade, I would err on the side of not trading. No need to force a trade when we have big pending news, and it has to be a great stock and a great trade. So, market components for today, if we look at our sectors, mega cap tech is fairly neutral today. Tech is a little bit weak. But finance, TLT are pretty decent. Flight to safety assets are also kind of up slightly, so there's a little bit of weakness there. But we have more stocks on our heavy buy than our heavy sell, so that's kind of what I look at. So to me, the market components are maybe like a 1 bullish or a neutral. They're not really swaying me in either direction. Our market context is also suggesting neutral. We know that the market isn't overextended. We do have to worry about a pullback, but we're not worried about a capitulation, and we're not worried about the bottom falling out. So those are the questions that I ask myself every day contextually on the D1 chart, right? In addition to where support resistance, I'm not worried about a capitulation because the trend has now gone sideways. I am worried about the pullback because now we're starting to go neutral when our shorter term bias was bullish. Okay. But we don't have to worry about the bottom falling out because the longer term uptrend has been very, very strong. Even if there's a bigger dip than we expect, we know that we're going to have a chance to get out because the trend has been so strong, and buyers aren't going to throw in the towel right away. They're still going to be trained to buy dips, and they're still going to try to ride this move higher. So what sectors are strong today? Energy and utilities were pretty strong. Semis and comms were a little bit weak earlier in the day. Let's check how they're doing right now. The main thing I'd like to check here is one. All right, so SPY is pretty flat for the day. What's moving up higher? Well, industrials are looking pretty strong. Finance is looking pretty decent. Energy and healthcare are on the weaker side. So I know that my pockets of strength and weakness are going to be mostly in those areas. It helps me gauge what's going on. If there is a lot of strength in tech, some strength in finance, some strength in discretionary, semis, right? Those are a big percentage of the market. And if those are strong, we know that there is a stronger uptrend. If all the other components are strong, but tech and semis are weak, then we know that we're probably in the later half of the trend because usually tech leads the way. And then when those stocks get relatively highly valued by institutions, we see some profit taking and we see some rotation into the other stocks generally as they want to get an evenly balanced allocation. All right, so enough of that. Our intraday bias is mildly bullish over here. Let's look at a couple of picks that I've tagged for today. So one that I liked early was AEO. Let's look at this D1 first. So had a bit of a negative earnings reaction, but you can see it has a decently strong, choppy uptrend and does make some moves each day. Now, what I'm watching for HEO is that there is some horizontal resistance at this level over here that it only, I mean, it opened above earnings, but that was an earnings kind of volatility move and, doesn't really, it wasn't able to really close and break through that resistance. So was really looking really great today, but what happened? Hit this T1 resistance, long red candle, and it's trying to crawl its way back. So if you're there earlier in the day, that's great. You would have taken gains, bearish engulf. You would have taken gains on this move up higher, on this lower high. But until this crosses this level, I would not be interested in that. ERJ doesn't have a ton of momentum, but it's a really nice D1 trend. You can see it's going parabolic. Energy is another parabolic trend. And it has a pretty nice steady price action on the stock. It grinds up higher. It's just holding its 8 EMA. It's not really doing a lot. It's kind of being pretty ignorant of the market. So let's review why we like this chart. First, excellent D1 trend. There is nothing in the way of this stock. Let me just check if there's any all-time highs. So I like to check the monthly chart for that. And there is not. You can see that. I mean, it broke through. This is a pretty major resistance level right over here that it broke through. I mean, it was at this level for years. And it's not a stock that I'm actually very familiar with because it didn't show up in the scanner. So we had this compression from May 2018 to October 2nd, 2023. And now it is absolutely zooming. It's good to check what news it over here. So it looks like, yes, solar includes residential, solar, and electric vehicle services. So you could check maybe what's some of the news, what's going on. A smart home market grows. Okay, so it looks like, and I don't check the earnings, but just good to know what's driving it. Looks like the smart home market is a new source of untapped demand, and this stock might be a supplier for that kind of thing in terms of solar and energy generation. In any case, all you have to know is that the price action is strong and the volume is really great. Post earnings breakout, and we changed the nature of the stock on a monthly basis. That's actually, I view that as fairly important. But in the course of this context of this trade here, was looking like, well, we have decent R volume. What I would do is take a small position here, and I would get in at the 8 EMA the next time it pulls back. You can see that we have a pullback, and we move higher, pull back, move higher, pull back, move higher. So wait for a pullback to this 8 EMA, and I would purchase it somewhere around here, and then you would rather move higher and take some decent gains here. Let's check the ATR of this stock, 1.8, so 67 cents. So yeah, if you take 30, 40, 50 cents on a stock like this, I think that's a pretty nice trade for a day like this. So our market bias still has to be bullish and has to remain bullish. So what would change our market bias? That's the second thing we're going to ask for. So one, we want the market to hold VWAP. Two, we want the market to hold its low of the day. So if it breaks to the low of the day, I am more bearish. If it breaks through VWAP, but holds the low of the day, I'm a little bit more neutral. It just means that we're range bound. We're not going to go anywhere until the FOMC. We know a strong stock like NRG should be able to hold its own in this sort of condition. And unless the market goes horribly wrong before the FOMC, which we don't foresee happening, we foresee it being pretty flat, we wouldn't expect NRG to also be very, very weak. So NRG is my day trade pick for the day. Like I outlined, steady grinder, excellent D1 chart, decent volume, good relative strength. Buy these dips, set an HA reversal alert, buy it closer to the 8 EMA and have it launch up, and then take 30, 40 cents of profit. So that is my pick for today if I had to make a trade. I hope you guys found this helpful. And tomorrow we're going to look at what the Fed did, how our NRG pick did, and then how can we adjust based on what's going to happen. So thanks everyone for listening, and I'll catch you all in the next video.